back to the rationalinvestor.com Broiler Chicken Show. Trade your trading plans. Don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the rationalinvestor.com's Broiler Chicken Show. This is our weekly offering full of rants and wonderfulness. Happy 21st of April. She was marching on here. And of course, happy post-Bitcoin happening day. Didn't really hear too many people talking too much about 420 yesterday. I suppose with all the kind of sanguine atmosphere around these days. I don't know, a lot of people are really up for the frivolity, but I bet you there probably was a bunch of stuff, especially here in Vancouver. They always do all that kind of stuff. So all you 420ers, sure hope you enjoyed yourself. And of course, I was a bit surprised, but actually the halvening event for Bitcoin happened on the 19th, Friday evening, and we even did just impromptu ad lib play-by-play as we went through the halvening event. So it was kind of fun. Recorded it. I don't know whether it's up on the YouTube page or not, but it was kind of fun. We had about 20 or 30 people just watching, sort of listening. I was playing some of the free background music that is not that copyright stuff, so you can play it on YouTube, but people didn't really like that, which I thought was kind of funny. But anyway, I wouldn't mind actually doing that going forward, getting into the habit of maybe like on a once a week basis, I might do it, where I just sit and do price charts and have music just playing in the background. Not really much audio commentary. Just charts. I've always wanted to do that. Anyway, so here we are in our weekend show. I think our school term now is on exam break. I know the level 3ers, which I'm teaching the level 3 program again. They had to take a 2-week break when I did my funny little adventure down the West Coast there in the winter. So they're coming up on their final weekly review. But if I'm not mistaken, I think that the level 1ers and level 2ers are now busy studying and writing exams. So good luck to you all on that. Probably a good opportunity if you are a general site member. I don't know whether Chris is going to post this AMA document to the YouTube page. But of course, you know, students should, there you go. It looks like you just did. But not a bad opportunity because the students should get priority when it comes to these questions. But since, we haven't had any questions posted by students this past week, good opportunity for general site members. And I think Chris posted the AMA document there in the members lounge. And also too, I see that he has posted it over there on the YouTube page. So we'll give you maybe 10-15 minutes or so to write any questions. The feedback that we sort of got was that we should probably try and do less rants and more just actual interacting with you, the audience. So here's your opportunity. All right. We'll do a quick review of the newsletter and sort of the key things that we saw this past week. And then we'll circle back around. Maybe we'll do something like we'll try. Maybe do like 5-10 minutes, just review of sort of, what the stories were this past week, 5-10 minute review of the weekly Bitcoin chart, 5-10 minute review of the sort of market of note. And then, like I said, circle back around to the question document and, see if we can get some interaction going with you guys. And of course, as we're going along here, we would like to try and make this a better show for you. So by all means, see there, Fred, can you please post that in the Q&A document? I would appreciate it. So somebody just asked a question there in in the YouTube chat. And I see we've got Adam with us, Mr. Sacramento Slam, Alexa, Nure, our German bodybuilder, and Fred over there saying hello. Feel free to say hello in the chat over there. And of course, hit the like button, subscribe, ring Colleen's bell, all that kind of fun stuff. If you happen to hear something that you go, wow, you know what? That's actually a valuable piece of information. So, are we ready, Chris? You want to hit the stopwatch? It's now 15 minutes past the top of the hour. Probably by the bottom of the hour, we should maybe have the summary of the newsletter sort of done. So here we go. So this past week, and keep in mind we're getting the AI bot to write the summaries here. So some of this is a bit canned. It's just frankly I don't have enough time to also write this as well. Basically my Sundays now, it's a full-time job now. Isn't it supposed to be the Lord's Day? Anyway. All right, so stock market witnessed a reversal of fortune last week with the S&P 500 continue its losing streak. Week as the S&P 500 continued its losing streak. I don't know. I think maybe AI got something wrong there. Propelled by a sell-off in AI and tech stocks. I don't know. Is it AI think it's a little bit self-important? Frankly speaking, I don't think this AI stuff is half as important as all these tech gurus. And in fact, actually, we used to have a German lady, and I used to take offense to it. She used to call us nerds. And it doesn't surprise me. This is Bill Gates for getting wedgies and stuff in high school. And I suppose all of them. I suppose Jeff Bezos probably got plenty of wedgies too. Oh, well. So I don't personally think that AI is that significant. It feels like it's more of a distraction than anything else, but that's just my personal opinion. And there it is. The abrupt downturn underscored concerns over lofty valuation, persistently high inflation readings, and I actually manually put that in there because I think that's what probably is the major concern in the market right now, is the fact that because the central bankers went screwed with the system there last fall because there was a whole bunch of corporate debt that was going to come due, and had they refinanced all that bad debt at those really high interest rates that we saw last fall, probably a lot of bankruptcies would have had to have happened. They manipulated the bond market. They forced interest rates to come down. All these Fed bankster crooks started talking out the side of their mouth, and all these dot plots, which are completely meaningless. But the media and the sort of brain numb Wall Street sort of, keep in mind, 90% of the people on Wall Street don't really know what the hell they're doing in the market. They just follow this sort of corporate drone shill. That's why you have the public buying the tops of markets. And that's why you have the public selling the bottoms of markets. Keep in mind, most of these Wall Street, you've seen like Kathy Woods. That woman can't get out of her own way these days. It's remarkable what a train wreck that story has turned out to be. And she follows a very sort of set investment model, and the way that this industry works, FYI, this is where you go, holy crap, I never knew that. Well, 35-year market veteran, I'm going to educate a bit here. Everybody falls into their own respective niche. Some people are fundamental analysis, some people are like top-down fundamentals, some people are bottom-up fundamentals, some people are technical analysts, some people are penny stock promoters, some people are mutual fund managers, some people are operations clerks. It's weird how people get like sort of pigeonholed in a certain career category. And in the mutual fund industry, there's a million different ways to skin the cat in this investment game, and each person has their own respective sort of speciality, if you will. And what ends up happening is, as the economy moves through its economic cycle, each of those specialities gets its little moment in the sun, kind of like, the way that we saw the eclipse there the other day. The eclipse isn't always happening. In fact, it happens very rarely. But just think of like an eclipse event as like, well, that's, if I had my eclipse event futures, well, obviously they're going to go through the roof as we're going through the eclipse. But then once the eclipse is over, boom, eclipse futures fall apart. It's kind of the same thing, and watching how Kathy has had to navigate her fund going from, absolute roof and, sort of God mode and, oh my God, Kathy Wood said something we all need to listen to now. I mean, her poor fund, it's kind of a train wreck. But anyway, so there you go. I just wasted 5 minutes, which I was supposed to be doing. Sorry for the rant, but really, there you go. Really good education on how the actual market works. I think we've talked a lot about this, and I would argue that the eclipse is highly part of this. In fact, actually, there was one gentleman, his YouTube video that I watched. I was very, very impressed with his, and ultimately, this is sort of where I really need to get my act to eventually. And I shared it with the YouTube audience. I was so highly, highly impressed. But anyway, this gentleman, with all of his technical analysis and stuff, is saying, this kind of looks like a really long-term cyclical pivot here. So don't be shocked if, we're maybe coming to the end of a very significant event here. It's a whole bunch of internals in the market that are just not happy. I did take a screenshot of his video about the Dow theory. This is a really, really important concept, which we, of course, teach in our education program. Interesting, he spent a good chunk of his video talking about Dow theory and the massive disconnect going on in the market. So, this is where, when you ask things like these AI robots, why did this happen? Why did that happen? You're going to get this canned response, and it's almost funny when you read through this, well, it's a problem with, I mean, even just listen to these numbers, they're great. In economics news, strong retail sales features, boasted first quarter growth estimates for the U.S. economy, robust consumer spending provided a much needed boost to economic sentiment. It provided a much needed boost to economic sentiment. What the hell does that even mean? Signaling resilience in the face of ongoing challenges such as inflationary pressure and supply chain disruptions. What? I think that we had the eclipse, and actually I've been showing you guys this chart for quite some time. We eclipse bottomed, we eclipse top, and fascinating, the midpoint of this entire move was almost exactly the midpoint of that cycle. And this actually represents, like I said, that gentleman that I highly respect there, he's saying this is the end of a very, very long cycle. If anything, you almost have to be a bit concerned, all you Elliott waivers, because to me, when I look at this, this looks like 2 to 3, 4 to 5, right? Because 4 to 5 is always smaller than 2 to 3. So, we might actually be going through a period of, just keep in mind, whenever you see a stock index like year to date up these absolutely insane numbers, and like this was like 20-30% rally, but 29% move to the peak, from the trough to the peak in under 6 months, that's problematic. So I don't think actually there's really anything really significant going on. I will say that, our moving average system off of the dailies here is giving us cautionary words. And then if we look at the stock market off the weekly, we're not at the point where you're like, uh-oh, SpaghettiOs. If anything, this kind of feels like maybe like that maybe that even that Elliott wave kind of thinking. I like a pullback into support, into the very normal seasonal troughing time of year, sell in May and walk away. Usually the market likes to bottom the end of June or so into that July 4th holiday weekend. And then we go into the summer rally season. And my hunch is we'll probably do a lot of backfilling and take a lot of this sell off back through that window. So yeah, I mean, I get the AI just sort of, trying to put it, if anything, this is, I even said this to Chris, and I've said it before. I like that this is actually, this would be, if you turned on the news station and you listened to the nightly news report, just that sort of, channel 6 news at 11, what's their headline? that they would say, well, why did the stock market do this? Well, it did it, this is what I would expect to come out of their mouths. But I think there's actually a lot bigger stuff going on. Like I said, the internals in the market looking a little troublesome. Considering we want to keep this relatively short, I think I'm going to leave the conversation at that. What I would say is if you want a really in-depth, and of course, me just trying to make a positive difference in this world, I'm not even going to take credit, go and subscribe to this gentleman. I thought he did a very, very good job. And I think his broadcast is like 5 charts that you should know about. I think he does an excellent job at summarizing the problematic situation that we see in the market right now. So thank you, sir. Chris just reminding me when those 5-minute windows are supposed to be up. What I will say with this, and if anything, this is probably a good segue. The next 2 topics of conversation, I think, are going to be exactly the same line. So number 1, if we want to look at what happened in Bitcoin and what's likely to happen in Bitcoin here, I don't think, there are some people in this world that believe that this stuff is all completely separate and they all sort of march on their own things. I might actually argue that Bitcoin's now at the stage where it's just part of the system and it's just another asset within the broader context of the system. So if we see that the stock market is not happy and it's coming off appreciably here, should we be surprised that things like Bitcoin looks like it's topping out and coming off here? I don't think it should surprise us at all. I'd also say too, very unpopular, but it looks like, once again, I think this is the correct thinking. Buy the rumor, sell the news. And last cycle, just FYI, and actually not last cycle, but the cycle that I think that we're replicating now, which is the 15-16 cycle, it sort of looked like this, buy the rumor, a peak about a month or so ahead of the event. Then we pulled back and we went sideways, choppy, had the halving event, then went almost dead for about a week or 2. And then we had our final sort of capitulation dump that kind of washed out the weak hands in the market. And I think that if you're going to take a screenshot of what's likely to happen, I would say that I would put money that some sort of scenario like this is going to happen. Big run up ahead of the event. Initial sell-off. Interesting that the initial sell-off, like in 15-16, it was pretty dramatic. Here, kind of muted. We basically just came back down to sort of the most recent pumps lows there. Then we dead cat bounced back into reload zones. And of course, this just even this tail low here down to here, reload zones. Oh, what a surprise where we stopped. So kind of just back and forth, back and forth. Had a couple of cute little lower time frame short setups fire. One here, 2-to-1 was hit. Take profits on half the position. Move stop to scratch, stopped out at scratch. Then another top came in. Same thing, rinse and repeat. Sell half on 2-to-1. Stop at scratch. And right now we're just sort of sitting there twiddling our thumbs. I don't know whether this one shows it. One of these charts I have. Maybe if I go like this and go like that. Actually, I think I had it like on 2 hours or something like that. And then you can see I've got lower time frame bullish setups happening coming out of that. I don't know whether this is gonna work or not. What I wanted to do, you can see I haven't updated this chart in a bit. What I just wanted to do was show you where that I think it's not there. What do I have to do? I have to go settings and throw all this stuff on here. Douche. So that last short actually was a pretty slick little trade right there. 61.8 fib tag, mountain man, bottom of our reload zone. And then a beautiful little harmonic right here. Nice, looks almost like a Gardley. Then beautiful little M and then puke out. That trade's still working, and I don't see any reason why anybody, at least I have no reason whatsoever to touch that. I find it very difficult to believe that we're going to be able to get all the way up here. I do like the fact that following the halvening event, this kind of made it like a little bit of a bull flag here. Just in simplest terms, right? This is your flag pull. And we'll just, keep it really simple. Let's put on just like a little triangle or something here. So there is your flag. Think of like Mario Brothers, if we do actually break out through the top here, then probably we go the distance of that that flag pull, which might take us right up into that original shorting level. There's a shot. It's just, I don't know. The actual levels of the trade, that was this image. All right. So you can see there is that flag pull. There's the bottom of the flag pull. So if we do A, B, C, D, and of course, you saw that I erased them off of that other chart, which is a bit frustrating. How am I going to get that back? I guess we got to unwind all this. Sucks. There it is. All right. So then we'll go back over here. Hopefully that put it back on there. There we go. So coming out of the halvening event, market was a bit weak. Not really a lot of selling interest here when we got below 60 grand. That's sort of what I put in the comments here. And actually I did quite a bit of write-up on this. And if anything, what a great analogy of why I like to use the 13 EMA on the weekly charts. You can see the 13 EMA stopped the bear in its tracks. Also, too, great analogy. And we started coming into this event. We were kind of like, well, there's the top end of the range, that big wick, and here's the bottom end of the range, all these tails. And the old adage, of course, is wicks and tails like to be eaten. So what did the market do over the next month or so? Is it basically went back up, ate a bunch of this wick, came back down, ate a bunch of these tails, right? And the troublesome part of this is that we did actually trade through this low. So because we did trade through this low, this 60,000 and change, that actually means that we do have a confirmed double top working here. 60,007. What's that number there? Old man Beamish, 760. So we traded as low as 59,629. So that's up, down, up, fail. So that is a double top. There's no doubt about it. And because that is an M, support could not come in and hold this thing up here. That means that we haven't established, this is now a valid working trend line. Now, the significance of this is, and sharpshooter traders, they'll be hunting for tests of this trend line to try and snipe their way in relatively low risk trades. You could very easily see the market shoot up through this trend line, even through this high. I've still been very skeptical as to why we haven't traded at 75,000. And, this seems like a really odd number. Keep in mind, these jokers, and if anything, this is the number one reason why I think Bitcoin price is actually extremely manipulated. And this whole thing is like a CIA pet project. I mean, look at the price that thing stopped at, 69,000 even. Seems a bit suspicious, doesn't it? This high here was, that's like, what is that? 64,000, what is that? 895, right? Kind of a weird number, not a big fat round number, nothing really solid. 69,000 right on the nose. Now that to me sounds like a Bitcoin print. Keep in mind this one here. And you can go back. A lot of these key pivots on Bitcoin are very suspicious numbers. 19,666. Now, is that actually going to stop on its own at that number? No, that's obviously a manufactured number. Somebody wanted that exact number printed there. So anyway, that's what leads me to believe that we could very easily have another probe up top here. Just to screw with the weak hands, the problem here, though, is because we have this established downtrend line, just because you get a probe up top there, that doesn't necessarily mean that this is some sort of new buy signal. If anything, what it means is I have to adjust my fibs to whatever the new high is and keep waiting for some sort of structural top. And if anything, I guess what I'm just thinking here is in the short term, I think that, we've got this juicy wick that goes all the way up there to 72,756. And now this tail here, that's 59,629. Could they spend another couple weeks here and just play around in this neighborhood here? And we're still very comfortably in this down move? Sure, absolutely. I don't think we're going to get above here. I think that the people that, especially if we look at like futures and stuff, the people that want to come in on the short side against these highs, I think, candle body highs for trade location, wicks and tails get eaten. I could very easily see, a nice serious next trade location. Keep in mind, as I had said earlier, we're already short. So the question here is, do we get stopped out on this short at scratch? I guess when we look at this price action coming out of the halvening event, and I had said, this kind of looks like a little bull flag. The bull flag itself, actually, you can see the bot setup. And if we go down to say, like I was saying earlier, I think this setup's like off the 30-minute. You can see there is 33, and you notice like we had a beautiful double bottom. The halvening was like literally right here. Market rolled over, came back down, tested the lows, candle body lows for trade location, all that kind of fun talk. Couldn't really break through the bottom here, started to turn up, and right at this point, I started putting out tweets. Oh, it looks like the bull's in control. So I wouldn't fault anybody if they were in this bot setup. And you'll notice that the objective of this setup is a test of, what is that? Let's call it the better part of $69,000. All right, good to hear. We actually have some questions. So I wouldn't be surprised if this pattern to take us back up top is working right now. We'll probably have the futures boys that they will gap the market higher when they come back in about 4 or 5 hours. I do find it interesting that an M has come in through here and kind of slowed down the inertia of the market. And in a weird sort of way, but just bringing this all back to where I started this conversation, my hunch, for whatever it's worth, is that we're actually going to go through a period here where Bitcoin price just basically goes sideways. And of course, we all know what's coming up here. Good old Brian's birthday. And if it's one thing that Brian loves to do, is he loves to give everybody a gift by crapping on the market, which makes everything go on sale and you all get fantastic deals if you're ready for them. So that's this kind of image. If we look back at that 2016 halvening, the post dump did bring the market back down to its 50% level. Keep in mind, this is on a log scale, if I'm not mistaken. Yeah, so it does look a little bit skewed. But I do like the idea, this is Colin and his pump chaser zone. We do have this M top working, which means that Foggenbombs are alive and good old chaos theory. Candle body lows for trade location. Wicks and tails like to be eaten. I think, if a wise person here, if you really do want to buy Bitcoins, you throw in your stink bid there right around that 2.618. We'll call it 40, I don't know, anywhere between $40,000 and $44,000. Maybe sprinkle in a bunch of bids and see if we get some sort of puke out candle into Brian's birthday, back into support. The 2016 scenario plays itself out. You can clearly see where trend line support is here. All of this is just fluffy fluff. We get that dump into that level. And then if we go back and we look at what happened in 15, 16, keep in mind, especially if we think about these moving averages in the short term, that is a very bullish moving average scenario there. They just may be a little too bullish. We get a nice little pullback here, bring these moving averages back in line. And I think that we're going to set up a scenario kind of like this right here. Boom, 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 boom. You bring the moving averages back into order. Of course, everybody in the public is going to be freaking out, and there's probably some horrific scam or some scandal or something. If I understand correctly, I think CZ is going to be sentenced, and I was shocked. I mean, is CZ actually going to go to jail? Wow, wouldn't that be incredible? What a story about crypto if CZ actually went to jail after being basically captain of the world. So, you can't write better fiction than reality. And of course, we know that Mr. Biden, of course, wants to get reelected, and he absolutely hates this crypto stuff. So has he got something, to try and pin some sort of horrific event? Oh, it's all on crypto. So now let's go and regulate the crap out of them and make it illegal. I don't know. Who knows? Point here is that I think that we're going to get some sort of major selling push. And then the irony of it all is that at that point, I think the market goes really quiet for like maybe a couple months, maybe even 2 or 3 months. And then we start climbing the wall of worry again, and the new real bull market actually kicks in. So there's your sort of 2 cents on what Brian thinks is going to happen with crypto and Bitcoin. Finish off here. Everybody and their brother's getting uber bullish about gold and silver right now. I do like the story, and actually I did even have somebody on the site actually even introduce me to some gold and silver bugs and say, maybe you want to go and talk to that audience a little bit. I did up an interesting chart study over the weekend yesterday in my free time. In that I've looked at a number of commodities, and I've seen it like one after the other, after the other, after the other. It doesn't surprise me what's going on. This is actually pretty typical for the commodities industry, where they just go one commodity after another commodity after another commodity. I remember a couple of years ago, at the beginning of the pandemic, they ran lumber prices. You guys remember that? And wow, lumber prices went through the roof. I don't know whether you guys remember that. Yeah, some of these gold stocks, geez, they look so pretty here right now. And I spent a lot of time through the weekend looking at gold and silver stocks. Actually, I found one here in BC that I really, really like. And the guy who founded Goldcorp, he actually went and just put in $1 million of his own money into this little junior piece of crap. And you can buy it lower than where he's long. Is that not a good idea? Sounds like a good idea to me. Anyway, I'm not going to tell you what to buy or sell. I will never do that on this channel. And hopefully that keeps us out of trouble with the regulators. I like to be a demonstrator of best practices. I'll show you what I'm going to do with my money. But I'm never, ever, ever going to show you an idea and encourage you to ride my coattails. I don't do that. If you want to participate with me, great. But certainly no incentive one way or the other if you do or if you don't. Now, what was I just talking about there a second ago? I got off topic. Thinking about the regulators. I see that the regulators are starting to crack down on all these social media influencers and stuff. So now, if anything, it's really important that we drive home. At TRI, we teach you how to behave. We never shill you a product that you must buy to get rich quick and all that. If anything, in the Twitter feed the other day, this is a little bit off topic, but in the Twitter feed the other day, I even put out, because I really don't want people to get confused with what it is that we do at TRI. But this was the tweet. I said, this is what we are shilling if we're shilling anything. The process, right? And if anything, this is my value to all of you, everybody in the world. Nobody teaches this anywhere. Or if they do teach you it, they'll charge you $10,000, $20,000, $30,000 for these kind of hootin' courses. Or you can take Mr. Gucci Sweater's $5,000 course, learn how to circle Bitcoin on a whiteboard, but that's another conversation for another day. But this is what I'm trying to teach you. And I'm over the top pleased that I've gotten through to enough people that we have actually people who can articulate this message really well. Josh, our sort of marketing guru at TRI, was the person who put this together. And when I saw this, I was like, this is it. This is absolutely perfect. So, and also to actually interesting, Josh and Joshua, both of you guys, one Brit, one American. They're constantly going on about this. Learn the process, learn the process, learn the process. This is what we teach. And this is the value, like when I speak to Jim and Lizzie, this is what you're here at TRI to learn. Not some fancy squiggly line, not some algorithm that's going to make you rich. Just follow blindly what the algo tells you. We're here to teach you the process. Now, if you use algos within the process, great. If you use valuation models within the process, I was even searching for stocks that I would consider investable in the silver and gold space. Because as I said, I do see that the silver market is waking up. If you want to follow along and learn this model that was taught to me a million years ago by a whole bunch of VSC floorboard traders, okay, fine. I don't mind. I'm here to make a positive difference in your guys' life. But what's interesting about these kind of models is, if I went out to the public and I showed, hey, look at this looks like a great idea, I guarantee you 99% of the public that would look at this go, you want me to buy that? That's going straight down. That's awful. That's horrible, right? I want to buy something that's going straight up. So I could teach you the process. The only problem is, will you listen? I don't know. That's up to you. Anyway, so back to our story. Somebody, as I had said, and we have one gentleman on the site who's trying to help sort of market the Beamish. He seems to like my message. And of course, he is quite bullish of silver right now. And that's fine. There's nothing wrong with being a bull or being a bear. The question ultimately, though, is this really a good, we are technicians by trade. So that means we should use the technical analysis skills that we have, try and help us maybe time our purchases a little bit better. And one thing that I was going to mention to these audiences that I'm speaking. In fact, I'm even speaking with somebody tomorrow, if I'm not mistaken. So, Mr. You-know-who on the site, thank you very much for the referral. And geez, he's already gotten the ball rolling. Super cool. But what I think's going on here is something a little bit different. And actually, you don't see this. You only see this about once every 20, 30 years. And that is, of course, I've shown you, and I don't know where to do it without losing all my fancy schmancy charts. But I think I've shown you Newmont Mining, and it being the biggest gold stock in the world, I think it's probably worth us paying attention. And what I noticed, of course, I don't happen to have it here just at my disposal. Oh goodness, I got too many damn charts. I do this every week. It's gonna be a while. Oh, stock analysis. This is a gold stock I'm super interested in. I don't think I'll show that to you today, but let's see what Newmont. Do we have the lines on here? Please tell me you have the lines. This was like a long-term study. Right. So once every 40 years, go through these Jupiter-Saturn cross-pivot kind of events. And once every 80 years, of course, we go through the entire Great Reset. Thanks, Klaus, you jerk. Of course, sadly, all Klaus is he's just a messenger. Do you kill the messenger? I don't know. I think that, this is, of course, that last cycle, 1980. I think there's a lot of similarities with what's going on in the market with 1980, but more importantly, I think 1940s. But, just in comparison purposes, I thought this was an interesting sort of comparison. If you look down, up, down, breakout, we have a nice big rally and then a consolidation, which sets up an absolutely insane bull market. This is the biggest gold stock in the world. So my hunch is it's probably going to telegraph the next move. So you notice like down, up, down, breakout. I think that's this down, up, down, breakout, which means we're kind of like right in here right now. I might even move this over. I did this a while ago, right? I think you can go, you are now here. If you want to do things like try and sharpshoot, Brian and his favorite fibs and all that kind of conversation. I think you can do that, and that'll sort of get you sort of sniping location. So that's, if we go reload zone, where's our reload zone? There we go. So you see how right down in here, these little pullbacks right down into this zone, and then they did it again, right? So you could do another reload zone down into there. Reload zones within reload zones. You hear Brian talk about that a lot. And whoop. So I think that's kind of what's happening here right now. Which means to me that I don't think that this is the crisis phase that launches these things to the moon. But I think that we're awfully close to some sort of major pivot. And like I said, there are other gold stocks that I'm super interested in. I just showed you that GROY. We're all supposed to be following weekly W's. Well, I didn't get much more blatant than that, eh? I mean, look at that beautiful weekly W. And this is a royalty. So they collect royalties off of properties. I mean, look at that. That's absolutely textbook. And then this stock, and this is a gold stock. They've got a property here in BC. It's a fairly respectable property. Following the VCIM model, we bought this thing the last gold cycle bottom. And I think, 4-year cycles, this really actually is just following the very normal 4-year cycle pattern. Bought a bunch of this off of here, got some great wins. Now, if anything, like this was the value trade that you hear me talk about when you come in at the bottom ends of ranges. I think now this is the momentum trade. And the momentum trade, I don't know what screen I had it on. Did I have it on this one? Yeah, there it is. So the momentum trade now, of course, is good old Brian's good old bot setup. So you can see the levels. I went and bought a whack bore of this stock. Yeah, friendly 1,000 shares. What the hell? At $1. Well, I like that. It's not bad. I could very easily see this thing double, and I'll get 500 free shares of gold stocks. And then, of course, if this thing does go crazy into those peaks, and these kind of names, they can go to $10, $20, $30 a share, no problem. If you've got those free shares just sitting on the back burner, great. And then I thought it was really interesting, and I'll show it to you now for fun, doing my VCM screener, which I teach in the level 1 program, that spat up a name like this. I mean, look at this chart. This is ridiculous. I mean, the thing used to be $3, $4 a share. Of course, they rolled it back. All these old shareholders are absolutely destroyed. And lo and behold, I don't know, can you see a letter of the alphabet coming in here? What's actually super cool about this is they did it on size. And they actually did a pretty big financing. And what's fascinating about this company is it's a BC, so it's local Canadian, friendly jurisdiction, if you could deal with the federal idiot that's in charge of this place. But what was fascinating about this is the guy who actually founded, and I don't even think they call it that anymore. What the hell do they call it? You know what? I don't even think they call it Gold Corp anymore. Isn't that funny? Anyway, company for the longest time I used to trade. I mean, I must have been bought out. I can't remember what the merger deal is. Anyway, a company called Gold Corp, and it used to be GG down in the States. But clearly that's not the case anymore. I don't even know what the hell this is. Anyway, if any of you gold bugs out there watching know what Gold Corp is. Anyway, the founder and the old CEO of Gold Corp, he just went and plunked $1 million into this stock. Now, what do you think? Is Mr. Gold Corp, is that worth? Do you see how, shrewd investors, they come in and they buy the bottoms of markets like this? What's the odds of this stock? And by the way, he's long from 40 cents, which is actually, I think they did the deal right up in this area here, if I'm not mistaken. And what's the odds of him seeing 80, 90 cents on his stock going down the road? That's pretty good. We can sneak in here at like 30 cents. I don't know whether I'm in a huge hurry. You notice there's a fairly large gap there. What do you see the double bottom there? I mean, have 30 cents. If I can sneak in here and I can get long from lower than where they are, what's the odds of me maybe doubling my money, getting myself a free position? Sell half on a double, and then I got free gold stock forever. You can see, look at the size of the gap up here at 40 some odd cents. So this is the kind of stuff that gets me all excited. And of course, if this thing actually hits, I mean, geez, that's what is that? That's 30 cents. So there's 10x there. So there's 20x. There's 30x just to get back to test these highs. Is that worth paying attention to? So I can appreciate that. I think there's actually some money to be made here in these gold stocks. And I like my VCIM model because it gets me in at the bottom of markets. Does it turn out to be something like this? We sell halves on doubles, triples. Then you have to wait a year or two for this thing to consolidate and then set up the next leg higher. Maybe. That's the way the stock market goes. So this is like an intermediate name. This is absolutely brand new junior name. And I'm wondering whether we should maybe, well, you can use the Newmont as a senior name. I actually think it's back in a buying window here. So interesting, the gold market. Now, for the newsletter's purposes, for whatever it's worth, we did silver. And, if you do this same analysis on the gold chart, it looks very similar. And I think this is the important message that I'm trying to convey to you. You see how price here is still down at the bottom end of the range here, even though price does look like it's working its way back up. If we do this on the lumber market, on the wheat market, they all look the same. And this is pretty typical of the commodity sector. So I did a study on cocoa. And I don't know whether you've seen what cocoa prices have done here. They've kind of gone a bit crazy. And yet the irony of it all is that really, actually, they haven't gone very crazy. The irony of all of this is that the people who are running this show have really, really manipulated the market, like very, very badly over the past, I don't know, let's say 10, 15 years, right? This thing called the Bernanke experiment. I believe that the Bernanke experiment, there's an old rule in the markets. You do not F with your country's money supply. Venezuela F'd with their money supply. You saw what's happened to their society. Zimbabwe F with their money supply. You saw what happened to their society. Post-World War I Germany, trying to pay these stupid reparations that these, and this is why you're not going to be able to make Russia pay war reparations in Ukraine. Mr. Cameron, you're an idiot for thinking this. Go look at your history books and see how that war reparations crap went with post-World War I Germany. You think Putin's bad, you might get some Hitler knockoff who replaces him. And keep in mind, these guys have nuclear weapons over there. So, I mean, Hitler wanted nuclear weapons. He would have used them against us. So, anyway, I don't know whether Putin uses his nukes or not, but that's another conversation another day. The point here is that if we look at something like cocoa prices, you can see, here was the 1980 peak. Here was the 2000 trough. This is exactly what's supposed to happen in these fear and greed cycles, where if everything is equal, this is the top end of the range for this hard asset, commodity asset. This is the bottom end of the range. And we just go through these 17, 18-year cycles. But you'll notice that, number one, this market didn't really peak into the window 2018 when it was supposed to. Did something happen in the world through this window? You all know the answer to this. That maybe skewed everything. And now that the people who did this something to the world, hint, 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 they went and completely blew up the money supply. Now that they've gotten away with what they needed to get away with, i.e., they had to buy up all these bad US bonds that were issued that should have never been issued. And these companies, JP Morgan, Goldman Sachs, a lot of them should have gone bankrupt. And we should have gone through a Great Depression and cleaned up all the excesses in our society. No, instead, what they said was, you know what, we're going to pass this on to the citizen. And the way that we're going to do this is by diluting the currency. And in essence, diluting the citizens' standard of living. Everybody's going to pay for what the banksters did to us. That's what the world you're living in with this quote unquote hyperinflation kind of world that we're living in. And oh, by the way, that's what cocoa prices have done recently. Because really what they're doing is this has nothing to do with these fear greed cycles. This has everything to do with these money cycles and the great reset that Klaus is on about. And how basically everybody's going to have to just get used to the fact that you have to add a zero onto the end of all your prices of everything because they're diluting the crap out of the currency itself. Nothing to do with cocoa at all. So if they can do this to a market like cocoa, and keep in mind, if you pull up your lumber chart, pull up your wheat chart, I would imagine every single one of these commodities is going to go through this kind of event. And the irony of it all is that this is actually on a relative basis. If you take the money dilution, that's this orange line. If you take the money dilution out of the equation, actually this is that 1980 peak right here. We're not even halfway to testing that peak. That's how bad this money dilution thing has gotten. My hunch is that at 50% of this range, that's probably where this thing's going to calm down and start backing up and backfilling. And of course, the public's going to come in and buy up here, and they're buying all the fund managers and stuff, sell orders. Heaven forbid, and I think unfortunately, heaven forbid, 2028, 29, 30, when the real next crisis comes. And I think that that's going to be the commercial real estate disaster. And of course, we're going to have more bailouts, which means more money printing. And unfortunately, that's when I think the prices really start getting going. And I have a feeling that's probably the end of the US dollar as a hegemony. I think that they will play kick the can down the road here for the next few years. I don't, the banksters right now are not talking about cutting off the credit. But, if we have a change in politics, in my country, the guy that's in charge is heavily in bed with these banksters and heavily in bed with the Klauses and the World Economic Forums and the Rothschilds and all that. So they're, as long as, he still stays in power, Mr. Biden is basically in bed with all of those. I mean, what a surprise. I thought it was an excellent analogy. Somebody said recently that, under Trump's tenure, no wars. In fact, actually, the world was pretty peaceful. As soon as this idiot gets into power, sniffing everybody's hair, all of a sudden, horrific wars, hundreds of thousands of humans dying right, left, and center. Is that the all right? And I've talked way too much. But anyway, I tried to get through all this, but that didn't work. So try and summarize all this. And thank you, Chris. They're going through the repricing event in the cocoa market now. Can you come in and buy cocoa up here? I think that would be foolish. Your time to buy cocoa was down in here, especially reload zones and W's and all that kind of talk, blah, blah, blah. Could they do this in the silver market? You can see, look at what silver is doing on that relative basis. And my question is, what price does silver actually have to go to here for this to come back to that 50% level like cocoa? And that's what I think is going on here. It's not so much that silver is so awesome and it's, the next best thing since sliced bread. I mean, it's just another commodity, but every single of these commodities must go through this repricing event and get back to sort of normalized valuations. And frankly speaking, in this kind of scenario, I don't know where the top, this top might be like $200-$300 an ounce. Could very easily be the case. What I would say here in the short term, though, is you can see, the market's worked its way up here. Is it a good idea to go and chase this market at this particular time of year? Just like I can't buy cocoa right now, but I can't really come in hard on these kind of names. If we look at the seasonality of silver futures, and this is half of the reason why we want to use technical and be this endeavor, right? I would actually argue that probably keep in mind this, market's moved up here a bit. I would just really be patient and disciplined and just wait for the market to come back down against these lows through that May and buy some of this. I don't think there's a huge hurry. And if anything, on a name like this, if I wanted to participate, I'd just throw my bid in there at 2 bits and just let the market work. And all of these, I think it's the same sort of thing. Be very careful here about coming in too aggressive at this time of year. I think you're kind of asking for trouble here. And this is the same conversation as Bitcoin. It's the same thing, sadly, as in a lot of the altcoins. If you're coming in aggressive in here, into this April, you see the little double top here in silver seasonally. Are you walking into a trap here? Are you doing what the public normally does and buys the tops of markets? And we want to try and buy W's, not M's. So anyway, food for thought, and that's basically my summary of this week. I like the idea that there is some money to be made in these metal stocks. And what I also really like, and that little Endeavor is a perfect example, is do you think the public is even the slightest bit interested in mining stocks right now? I can absolutely unequivocally, categorically tell you they're not interested whatsoever. So me as a smart guy, I've got to listen to people that are much, much smarter and much richer, and of course are experts in this field. And if this guy who founded one of the biggest gold companies in the world is coming in here and buying $1 million worth of this, is it worth me strapping on a couple grand of this thing for my registered account? This thing could easily be $20, $30 a share down the road. It would not surprise me one bit. And can I get that sell half on a double off and get some free stock on the books and have no risk on this thing? Well, that's what I do, right? Anyway, rinse and repeat. All right, so hopefully that gives you some value. If you enjoyed that little rant, and I don't know, that was too ranty. I think it was a pretty good walkthrough. And what my fundamental justification for looking for silver prices to move higher here over the let's say the next few years. I think from a commodities perspective, I actually think that this makes perfect sense. And interestingly enough, they always say that the metals are the back part of the commodity cycle. So the front part of the commodity cycle is your energy. Then, we go through all the different components, things like foods and fibers, building materials, etc. And then the back half is your inflation proxy, like gold and silver and platinum and palladium and stuff. So anyway, hopefully you got some value out of that. Hit the like button, subscribe if you enjoyed that. All right, questions. Not really hearing too much in the way of questions or seeing too much here in the way of questions. But we got a good hour, I suppose, to work away on this. So we got 3 questions. Let's just jump right in here. Take a sip of beverage. All right, so first question here. Hi, Brian. Looks like Rune is getting close to the 78.6 retrace. It has done the bounce. Do you think it can still get there? It has to be the best buy in crypto if it can get down to that $3.10 price, maybe in May. Many thanks. Okay, so this is just an opinion piece. I mean, everybody's entitled to an opinion. Do I have like a crystal ball that says thou shalt do this, thou shalt do that? No, clearly not. So it's just really a question of I'll give you my opinion of what I see, but obviously nothing guaranteed from management. I think what would be best is, as always, you want to go through sort of the 3-step process. So step number 1 should be we want trade location. Step number 2 should be, and I was thought this was in Seward's list here. This is actually my older one. Step 2 should be indicator confirmation. Step 3 should be price structure. There's Rune. $5.61. Oh boy, quite a punch in the nose, eh? Where do we want to look at this? If anything, wow, what a great analogy of why you just can't chase. You chase, you're just going to get yourself into trouble. Oh goodness. There's that 78.6, $3.06, eh? All the way down at the bottom there. I get the impression from Stewart that the story's fairly good. So I wouldn't have a problem if you were like, hey, you know what? I missed the run up and I want to start building a position. And once we are at or below reload zones, you just start nibbling away. Maybe something like, we're not allowed to break the 5% rule. So I don't want to hear that you're putting more than 5% a year. So what money you have to work with in any one name. So, maybe you come along with little 0.5% purchases. So that way you could do 10 in total over the next, say, 6, 8, 12 months. And I like that kind of approach. For the people that are kind of like, you know what, I don't fancy myself a sharpshooter, gunslinger TA. I just want to, try and come in and buy good quality names at or near the bottom end of the range. And keep in mind too that little old lady approach, that is a risk management approach. It really isn't a trade setup. I do find it amusing that for some reason people in the public, they just latched on to that concept and they call that a trade setup and sell halves on doubles and stuff like that. That has absolutely nothing to do with the little old lady. But it seems that the definition of all of that's getting rewritten as we go through time. It's quite remarkable to watch how it happened. But anyway, it is what it is. So for the record, little old lady just simply says, I used to have clients of mine that used to, they never wanted a phone call that, hey, you know what? We're underwater on this margin position. You got to put more money in the account or we're going to have to liquidate you. They never want that phone call, ever, 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 ever. So the way that you avoid that is you just make a rule, do not put more than 5% of whatever money you have in the account. Let's say your Uncle Louis died and he left you $10,000 or something. All right, well, then we all know, boom, I'm not allowed to put more than $500 into any one particular name. That's the little old lady approach to risk management. What you do once you've pulled the trigger, well, that really that really should speak to sort of trade management. For those little old ladies that did take those trades, I think it's an excellent idea that if the asset does double in price, you just knee jerk, don't even think about it, because 9 times out of 10, when you try to outsmart the market outsmarts you. So keep it simple, stupid. If the asset doubles from where you bought it, boom, out goes half. Don't even have to think about it. No rocket science. No, well, got to pay this guy ridiculous amounts of money to manage my money. It's really simple concept. And that's why I think the sell half on a double strategy works so well. It's just really, really simple. And I have a feeling a lot of these crypto names did go and double and triple, and the guys that are looking for 5x, 10x on their money, they might have completely missed the move. We'll see. I suppose on this kind of one, I would want to be long from, say, $2. I would let half of it go at $4, somewhere up in this area. I mean, if this thing's running like crazy, maybe just give it some space to let it breathe a bit. We had 38.2s up here. You want to throw your order up around $5, 4.669s, all that kind of, that's fine, whatever. I might even argue that at $10, you got an opportunity to let another half of it go. And then this is the beautiful part about this strategy is when it does come back down into reload zones, as these things go up and down like, you know what? Then you can take all that capital that you farmed out of it and you can go throw the capital right back to work. That's sort of, teaching a little bit, not necessarily giving you an opinion of what it is that I see here in the price chart. I hate to say it, what I do see here that kind of is jumping out at me is this looks like a shoulder here. This looks like a head here. And that by definition means that there should be some sort of shoulder over here. And actually, you know what? This speaks to something that somebody just posted in the lounge today, which I thought was absolutely cool. This is from a longtime site member, username. This silly fucking tech world that we live in. This is nuts. I mean, I really don't like. I used to get so angry when people used to call me like, "Hey, Beamish" and stuff. I'd say, "Look, my name is Brian. Call me Brian. God damn it." Now, I mean, hell, you can be named anybody. It should be. Anyway, so this person did a chart of username, if that is your real name. BTC.D chart. It follows a sine wave based on having events. And the crazy alt season with the big BTC-D drop is always 34, 35 weeks after the halvening. As of now, if we follow that, we would have the start of the alt season in Q1 2025. That's kind of interesting. That's like, I guess, over here. So that would be, I guess, this is alt season here. I don't know. So BTC kind of dominant, still kind of pointing up, I guess, which means that altcoins maybe not going to do so hot. I'd also say too, something that kind of bothers me when it comes to the broader crypto market is if you look at things like that total. I'm not quite sure where the hell I have it though. I did have it on here. I mean, if you look at the stock market, oh boy, it's having a bit of trouble. And it doesn't surprise me that U.S. politician in the House of Representatives finally is getting off his ass because now the stock market might tank. And if it tanks, well, he does nothing. And all of a sudden, well, what a surprise, a whole bunch of stimulus to the U.S. economy and all this $100 billion of funding for all these wars. What a surprise under the Democrat presidency and stuff. I mean, it's just so cliche. But if the market does break here and the politicians are perceived to have do nothing, then they might just lose their jobs. And keep in mind, House of Representatives, I think you're elected like every 2 years. So they get a lot, there's a new election coming for them pretty quick. Anyway, back to crypto here. I don't know. Maybe I'll just do it here. Did up a really cool chart. Yeah. So, this is the total crypto market cap. And I mean, I hope you can see this. What do they always say? If you ever see the market smiling at you, so voop, voop, and voop. So we got a full-on smile working there. The trend line itself is there. So I think that the total crypto market has topped. And I wouldn't be surprised if we have to just do simple things like 50% retracements. So technically speaking, Colin and his buddies, the pump chasers, where is it? There's that. So there's 50%. I wouldn't be surprised if we have to work our way a bit lower here. I don't see any reason to be overly bullish about a chart like that. At the same time too, though, keep in mind, this is a weekly chart. Could we spend a couple months and through sort of the summer silly season, work our way back up? Keep in mind, we should look for some sort of pivot. Maybe we do something along those lines, right? So, May, June, usually that's a bit of a tough time of year in this space. Maybe we do back and forth and rally back up against these, wicks and tails like to be in counterbody highs, trade location, blah, 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 blah. Maybe this even goes on even into the better part of the summer. Tough to say. Might even, looking at this chart, actually, I would actually prefer to see something like pull back into 38.2, then our dead cat bounce rally, and then something like that. So broader crypto market, that's kind of what I'm thinking. Sort of like we're on a down push, then a rally through the summer. And then as we come out the back end of the summer, Getting ready for the election, and does Biden shit on this space, whatever, trying to buy votes. So in this kind of environment, what I could see here on something like Rune is, we waffle around. I mean, you see how long this took to develop. So my hunch is probably the same amount of time. There. That's how long we got to take to just sort of find our bottom and turn back up. So that's through this whole sort of May, June window. You see that? Then coming up the other side of that, we have a nice little counter trend rally in through the summer silly season and some sort of rally back up to make what looks to me like a fairly significant head and shoulders pattern. So boom, 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 boom. And even notice there's even a little head and shoulders right in there. So this head and shoulders itself, if this is the case, right? Like you see here, right? Kind of what I did here. Probably looks something like that. So that's kind of what I'm thinking I would be expecting out of something like this. I mean, keep it simple, stupid. Don't overthink this stuff. So is this enough to call a bottom in the market? Just what we're seeing here in the short term? No, not even close. Could we see a substantial bounce off of these levels? Absolutely. I mean, we should at any given point in time look for 38.2 bounces straight up. Maybe, notice that this high right here, maybe we just go boing straight up like that, right? And then we have to go all the way back down, right, to make that low there. Then we will go all the way back up to make this high here, etc. So I certainly don't think it's a new uptrend. And what I would say, to keep it simple, stupid, kind of like here, show me some sort of bullish structure on the other side of this trend line, and then we can start getting bullish. Well, same sort of thing here. If I go that high to that high there is your market structure. So we can't even remotely get bullish until we see bullish price action on the other side of this trend line. And I wouldn't be surprised, to be honest with you, looking at this, looks to me like we're probably just sort of stuck in this between these two trend lines right now. And probably this uptrend line here probably acts as support. So, probably if we have to. I don't know whether we have to go that far. Maybe something like that. I could see something on the if things get really ugly. So the near-term objective would be, first and foremost, do we actually have trade location for me to actually start getting uber bullish? I think this is Mountain Man, dead cat bounce kind of trade. He would come in, buy this level, have a set profit-taking level, and I like this 38.2, tag of the trend line from the other side, test of these highs and that high there. I like that. Might be a bit aggressive. If we look at the moving averages, my hunch is the fast moving average should act as pretty stiff resistance. Oh yeah, look at that right there. And then look how the 30 moving average is just sitting right on that trend line. So right now, as it is, we just ran into resistance. If anything, I almost kind of think, with this big down and this up, it looks to me like maybe we need to go through a period of just sort of sideways here where we figure out who's going to win this moving average sandwich. If we can resolve this to the upside, then this kind of looks like a double bottom. And my hunch is like 2.618s off of this double bottom are going to take us up into that resistance level. So that's there to there and there to there. 2.618, yep, all the way basically at 50% level. So, I really wouldn't have a problem if you actually said, well, Brian, based on that 2.618, this is a trader's got to trade. I'm going to buy this fractal, boom, 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 boom. And I'm going to look to take profits on a revisit of the 50% level. And that sets up a 2-to-1 risk reward. I think you could probably sharpshoot this and maybe at this point drill down to like a 30-minute and see if you can get like a little tighter entry here. Yeah, so you can see off of there's that higher time frame double bottom. Notice how there's a cute little double bottom off of this lower time frame right there. What do you think the odds are? 2.618 is that level off of that double bottom. I bet it is. Yeah, so you can see all they did was rally it into 2.618. So that means you really want to try and sharpshoot this. Then maybe something along those lines there. That's your primary trend line. And actually, you know what we could also do for fun is we can go like that. What time is that? I should probably keep moving on, boom. Something like that. There we go. Boom. And then boom. There we go. And yeah, so this trend line right here, this is the midpoint of this channel. That's what the market's working with right now. So my hunch is that should probably be pretty stiff resistance. And if you really wanted to sharpshoot this, right, probably reload zones off of this range. So maybe something like down in here. Not a bad level. But if you do trade this, I'm off the 30-minute. And if we lose these lows, you better get the frick out of there, right? I mean, this is a trader's trade. I don't know whether your question is coming from a investment perspective or a trading perspective. But from the trader's perspective, I wouldn't fault you if you were like, well, you know, we're coming into the reload zone. I can get any kind of bullish setups down here, nice, cute little W's. And really, you could argue this is what's called an Adam and then an Eve. That's actually a pretty normal textbook kind of tradable bottom. Doesn't surprise me this trade came out the backside of this. Would I step in and buy this here? Nah. I would prefer to wait for better trade location. I don't really want to be a buyer of this. Outside of this reload zone, I would much rather try and target like these uptrend lines down here. You know, Brian's favorite fib. I'd be sitting down there at that $3 level. Just be patient. There's no hurry. And if anything, if this thing does work its way up, you know, again, are you a trader? I can't comment on that. If you are trading this, okay, great. If we lose these lows, you better square up. There is a double bottom there. For the investors, I wouldn't have a problem if you did nanny nibble. I don't like the idea of you nanny nibbling up here. You know, try and maybe do it in the reload zone if you can. And I don't really have any higher time frame reason to get excited. When I look at momentum here, I see one W in RSI. Of course, we get a trade signal on two W's in RSI. So maybe if another W does come in here, then okay, maybe we got something to work with. My hunch is just in the short term, notice 30 SMA along that trend line. I think where they're going to take it up into this area here. So, you know, if you're going to use short-term objectives, that would be kind of predicated on the, you know, the Bitcoin price action still working its way back up to the top end of the range, wherever that chart was. This right here, this continues to work higher. And like the total market, it continues to work its way back up against this trend line resistance. That's what it would take for this little guy here to work his way back up into here. Is the whole market needs to sort of get into orgy lift mode. Having said that, I don't really have any divergences here on MACD. There's nothing really to get too excited about. And Willie, yeah, he's stupidly oversold, so that's good. Means it doesn't necessarily mean it's a sell signal, but it means it's way too late to be a seller. So, you know, you really shouldn't be thinking about selling here. That's sort of my 2 cents. It's kind of, I would even say, you know, honestly, this is kind of like no man's land right now for the higher time frame participant. And I want to try and force myself to come in and buy against the bottom end of ranges. Now, let's circle back. You know, if we start seeing on things like Keep in mind that if I change this to a line chart, you notice that our pretty W's just disappear. So maybe that's where we'll leave this off, right? Is if you actually start to see a W come in on this daily chart, maybe what we create is some sort of fractal bottom, right? Test this low, reload zones, all that kind of talk. And we actually get that clothesline W to come in, then it probably sets the stage for a sustainable rally. Right now, I would just say that they're messing with, sadly, so you saw Willie stupidly oversold. So the public is coming in and selling down here, which I don't think is a great idea. You missed the top. That was way up top there. And right now, they're just messing with the market. There's no real momentum signals. This is a meh trade location. Yeah, I can understand the lower time frame. People are having fun in this market. We showed you the double bottoms, Adams and Eves. But for the investor, there's nothing really to do here just yet. And of course, you want to keep it really simple. Just wait for the moving averages to turn back bullish again here. They're nowhere near bullish. And this is probably going to take a little while to clean up. Okay, I think I answered that. I hope you enjoyed that. Number 2 is just a chart. Let's see what we got there from Coinigy. Kraken, Ruin. Oh, maybe this is part of the first conversation. Yeah, I mean, you can see where the bottom is. This thing's coming off a long way. It looks like you sold up top here, so yeah, not bad. And this is reload zones off the entire range. I really like hunting that $3 level. Of course, Brian's favorite fib, right? If anything, I'd almost like, I guess you can understand why we're getting the lift off of here, off of these tails. So wicks and tails like to be, and there's a bunch of trap bears in there. They got released. Is this the sustainable up move? I think it's probably a little too early to get too excited about that. And even off of your 3-day chart, you can kind of see the massive head and shoulders that could potentially be forming here. And probably the best way to see this would be off a log scale. So, if this is the end of this big bull run, and keep in mind, it was a pretty damn big bull run. And we change this to a log scale, then your head and shoulders pattern, you can even see it kind of writes itself. Notice that the head and shoulders pattern, right? So that'll be the top of your head, and that'll be your neckline. So that's your measured move. That shall be down to here, right? So ironically enough, if this is some sort of end to this rally, and like I showed you on the site, somebody was passing around that sine wave chart, and the altcoin season is kind of a, you might find that this guy has to work all his way, all the way right back down to the end of 2024 through that election. And then we start the whole game all over again. And what would be cool is this trend line here probably will act as resistance on the way back up. So head and shoulders, notice the apex of these two downtrend lines happens to be right around that same level. And also too, if we did a fib off of this high back to this low and drew it like log scale, what do you think the odds are that reload zones are down in here? And I wouldn't surprise me. Let's change that to log. Boom. And oh, what a surprise. There's 78.6 off the log scale. So can this market keep growing? I think the answer ultimately is if we go and fractal out here, watch the counter trend rally through the summer, and then, at the latter part of the summer, you start seeing this thing fall apart. Don't be in love with this. This is the whole reason why I want you selling halves on doubles and all that kind of stuff. Just, as other people on the interneting say, de-risk yourself. And if you're playing with the market's money, if you're playing with somebody else's money, you've already sold half on a double, then who cares what happens to the rest of it? Man, the market does what the market does. But if you come in and buy here and you start to see this thing break down, it could go all the way right down to $1. And then, of course, all the lawsuits start flying. Okay, I think I got to leave that at that. So it turns out 1 and 2 were basically the same. So there's really only one more question, and then I guess we'll wind it up, and I'll head off to Lily. So, what are your thoughts on crypto bull market during QT versus QE monetary phases? Does it not have an impact on altcoin season? For instance, if the Fed decision to cut rates, that could put a bottom in the altcoin market. All right, so you're kind of, whoever asked this question, would like you guys to actually put your name in here so I speak directly to you. You're actually talking about apples and oranges here. So QT and QE is actually something that you're probably not going to see reference to for the rest of your life. Maybe 40 years from now, when we get on to the next cycle. But I doubt it. I might make the argument that the next cycle peak that you're going to see that'll freak you out is going to be an interest rate peak where interest rates are double digits kind of idea. This historically low interest rate environment, I don't think any of us will live to see another repeat of this. And I think in a weird sort of way that's actually intentional. I mean, were any of you alive in the 1940s? That's basically the last sort of great reset, Bretton Woods and all that. So I don't think, if and when, now we still have this commercial real estate problem to deal with. I'm getting the message from the central bank that they would actually prefer not to get involved in the market. They might even just leave this to government to deal with. So I would make an argument that in 2008, the US government was basically bankrupt. Still think to a certain degree that they are. I mean, it's ridiculous how bankrupt they are. And that's all these Western nations. I mean, the whole damn world. It's all, everybody's bankrupt. But it was interesting. I don't know whether you're aware. I don't know how bad it is in my country. I didn't see the number, but technically, every US citizen that is listening to this broadcast, you are on the hook for about $150,000. And this is why it's so difficult for you to renounce citizenship of these countries now. Because you are on the hook for a lot of money, whether you like it or not. Anyway, that's here nor there. But I think you're comparing two completely different things. So Q2 versus QE, this is a completely made up concept, by the way. This never existed before. Like what's really going on here with QT and QE is this Bernanke experiment. That's what QT and QE and all that is. It says one guy, oh, I've been studying the Great Depression my whole life, and this is the way you get out of it. Well, what he basically did was he just continually mortgaged the future of the citizens to bail out really bad business practices that are done to line capitalist pockets that work in the financial services industry. And it's so cliche, and it just happens over and over and over. And these silly humans, nothing changes here. This is just one guy's solution to this problem. I personally would have preferred the Great Depression solution. Then that way, the capital base of the country itself, the actual net worth of the country itself, remains intact. Following the Great Depression, the United States of America came out basically the strongest nation in the world. Incredibly powerful balance sheet, and of course, economic powerhouse. That's not the case now. So they sacrificed all that economic powerhouse, sound financial base to bail out all of these bankster crooks and all of the horrible lending that they did, through the collateralized debt obligations, CDO nonsense. And from what I understand, they're doing it again in the commercial real estate industry. So the question will be, will the commercial real estate industry, because they even have the exact same thing, they're just called commercial real estate mortgage-backed securities, commercial mortgage-backed securities. So they're just doing the whole damn thing all over again. Although 2007, 2008, it was the residential real estate market. Now it's the commercial real estate market. The question ultimately here is, the banksters are trying to con the U.S. Congress and the public into thinking, oh no, they're in front of it. They can handle it. Everything's perfectly fine. But is it? And of course, you only find out how bad it is after the fact. I suppose that's half the reason why these guys are getting all excited about things like silver, because they're kind of giving up on the US dollar. We will see. Only time will tell. So just understand that these two concepts that you're combining here are completely different. When interest rates are at zero, it's very difficult to cut interest rates to stimulate the economy. So I might make the argument that the Fed will only cut interest rates if there's some sort of crisis that needs some sort of help from the central planners. So the fact that they got interest rates substantially off zero now, I don't think you're going to hear too much about things like quantitative easing anymore. I mean, there are people on the site that talk about the Fed's balance sheet and there's a specific term for it, repo market and all that kind of stuff. Lots of fun and games going on in the background. I actually think for this particular cycle, and that's really coming back to this image, I think for this particular cycle, you can see that they did the money printing, and they're actually trying to say, look at enough money printing. We got to somehow get in front of this inflation problem. So I don't really think that the United States is going to allow this to break to new highs. But at the same time, too, I could very easily see over the next 5-10 years kind of idea to absorb the commercial real estate problems. I could actually see more along the lines of the S&L bailout. So if you know what the S&L industry was and the S&L crisis, I could see a similar scenario there. And that was 1984, 1985, 1986, 1987, all in that time period. Maybe more like 85, 86. And that was like Charles Keating. I think that was his name. But I could see what ends up happening here is that they just play within this playground. They've already done the damage to, hyperinflating the money supply. I'd be surprised if that really breaks to new highs. I think that if there is any economic problems and you see the stock market coming off, the Fed can just simply cut rates. But that has nothing to do with quantitative easing and quantitative tightening. Completely different conversation entirely. So, you've heard them talking about how the Fed wants to cut rates 2 or 3 times. Well, I mean, they started out like at the beginning of the year. Keep in mind, I think what's happening now is they are using their public speaking, their credibility with the public to try and push the market around. We all know, of course, that these people are absolutely horrible predictors of the future. I mean, they completely got the inflation thing utterly and completely wrong, unless, of course, they were lying to the public. Would they do that? I'll leave you to answer that question. I think you know where Brian stands on that. But I think that money printing and all of that's old news. They've already done that. That's yesterday's story. Now it's just really going to be a question of, do they go back to, well, historically, their only tool that they would use is adjusting short-term interest rate policy. I think if anything, the Fed would like to see the economy break, but they're not in a big hurry to lower interest rates until they actually do see that break. And, if anything, it's kind of an interesting scenario with what we're seeing out of the stock market. Remember the guy who's in charge of the U.S. House of Representatives and the whole sort of Ukraine funding stuff? Keep in mind, this is a whole bunch of stimulus that will stimulate the economy. It'll probably put a bid back in defense stocks and all that kind of stuff. This has nothing to do with the Fed. This is all about the U.S. federal government, because the U.S. federal government is now back in a position of strength. They can issue $100 billion in stimmy, because that's basically what this is all going to be, which should put some sort of floor in the market here as that works its way through. And of course, seasonally, this is exactly the time of year for that to happen. So I wouldn't be surprised if, kind of like what you see here, the market, as it was working its way up, that Johnson, I think his name is, he was like, I'm not going to vote on Ukraine stimulus. We don't need any stimulus. I don't need any. The moral sort of angle is, help the Ukrainians by giving them missiles and bombs and whatever. But at the end of the day, what this is really about is stimulating the U.S. economy. And as the stock market was powering its way higher, did the economy need any stimulus? Absolutely not. Now that the market is breaking and it's starting to waffle and waver here, it doesn't surprise me that, okay, time to turn that stimulus engine back on, and let's go and do the morally right thing and help Ukraine. The one good thing I did see in that potential legislation was that over half of the funding that they're going to give to Ukraine is actually going to be in the form of loans. So I would much rather, and this is just the economist in me, I would much, much rather the U.S. tax-paying citizen say, look at Ukraine, if you want to fight for your country, great, go and fight for your country. We'll help you all I want. But at the same time, too, I'm not here busting my ass at my 9-to-5 job at fucking 7-Eleven so that you can have a free life. And of course, keep in mind, all of my working wages are taxed, and it's those taxes that are actually funding your war. I don't think that that's fair. And of course, I'm absolutely disgusted with my idiot leader in my country, the way he's just spending my money as a tax-paying citizen and forcing me to go into horrific debt for his stupid little pet projects of Klaus and all those dickheads. That's Brian, of course, getting off on rants and stuff, so we better not go there. So I think it's important that you understand the difference between QT, QE, which, frankly speaking, I think you're going to see fade into the background. The only reason why they did this was because they had to deal with that horrific U.S. bond issuance disaster. And this is the Bernanke experiment. I think the experiment it will be labeled in history as what caused the hyperinflation, which destroyed our society. And the world that you lived in the 20th century, we say coming out the other side of this Jupiter-Saturn cross, 6 different celestial events, moving into the age of Aquarius and all that nonsense. The world that we knew prior to all of this bullshit, we won't see again. That world is slowly dying. And just like the baby boomers, that all of the references, I mean, it's incredible that, the way I go around and make references to stuff from last century, and a lot of people even on the site are like, I have no idea what you're talking about, Brian. So you can already start to see that civilization is already starting to fade. And now we're starting to get used to things like $2 a liter for gasoline in Canada, which is ridiculous. considering we're sitting on the second largest supply of crude oil in the world. That doesn't make any sense at all. Unless, of course, there's some sort of agenda going on here, which we all know is. With regard to the cryptocurrency market, I would say actually probably your easiest tell as to the health of the cryptocurrency market would be to actually watch something like the Russell 2000. Because I think the Russell 2000, which is kind of like your small cap index in the United States and really, small cap sort of market around the world, venture cap kind of world. I mean, this is basically, remember, it was like 2023, get your shit together, remember? And then 2024, wow, altcoin market's gone crazy. Well, you can see how the junior stock market bottomed there last October 2023. Remember, get your shit together, all that talk. And it's enjoyed a very substantial rally here of late. So I might argue that, and again, if you think things like 4-year cycles, well, this is exactly what's supposed to happen. You notice that 4 years ago, the market lifted to give us that 2021. I think probably we're on the same sort of path every 4 years. You could probably go back. What did 16, 17 look like? So you can see lift, lift, lift. Not really a big surprise. So I might argue that the altcoin market is very similar to this kind of image. Could we take a little while here and clean this up and, reload zones? And can I see new W's? Obviously, we have an important pivot here. And this is exactly what I was pointing out in that rune. It's the same thing. So you can see there's a potential head and shoulders in that rune that we looked at, right? We had said that there's the head and shoulders. Hopefully you see the same thing. So this is yet another anecdote about how crypto isn't really that disconnected from the broader market. Actually, if anything, I think it's now sort of become entwined in the sort of ethos of the investing universe. And I mean, you want an absolutely perfect analogy of that world that we're moving into. I thought it was hilarious. I don't know where it is on here though, but somebody was posting on the site earlier today that I think it's something like the IMF now says that crypto is now essential to the global economy. Oh my God, you got to be kidding me. How does this headline go? Boom. IMF says Bitcoin has become necessary financial tool. What happened to that big fat guy? Remember that big fat guy that absolutely hated crypto? We always talked about him eating a couple kids while he was on his way to the what was that guy's name? Does anybody remember? He was like some Argentinian banker or something like that. How ironic. Now these clowns have basically turned like completely 180. What a crock of shit, eh? And if anything, this is such a great analogy. I think that all these banksters were blatantly lying to our faces this entire time. And I think I would say that I would not be surprised if Jerry actually owns a whack of Bitcoins himself. That would not surprise me one bit. Fred Drums, was that you who asked that question? In fact, I remember somebody asked a question in the lounge and I asked if you could put the question into that document. So if that was you, then okay, cool. So what I would just simply say is the altcoin market, it probably will follow the path of the broader speculative market. So if anything, what probably would be a wise idea going forward, if you do like playing the altcoins, is just to simply keep an eye on this chart. And when you see that this thing is turned back bullish, odds are the altcoin market has as well. And interesting too, look at all these gaps on this. Keep in mind, this is a really, really big ETF, right? Exchange traded fund. If you think these gaps need filling in, I mean, would that be normal? I think you should know the answer to that. Would be interesting too is if we draw that and then go reload zones and oh hello, there's Brian's favorite fib sitting right in the middle of a big fat gap. So I might say that I think you've got your levels. And if we look at that total 3, which is like everything except a Bitcoin, I mean, what are we supposed to think if we see the market smiling within a smile, within a smile? Holy crap, how many smiles are here? Look at all those smiles. Well, there's 1, there's 2, there's 3. There's 3 smiles working there. Holy crap. Be careful here, folks. And look how far we've come here. So, if you just do fog and bombs, my hunch is this is probably like 4669s up here. So let's go chaos. Boom. Oh, just missed. Oh, if anything, that's good. Maybe there's one more push up top here. I tell you though, I mean, gee whiz, that is a lot of resistance up top there. My hunch is these all now are all like sort of little brick walls in the market. Really tough. A lot of resistance in this market now. So yeah, it's going to be a bit of a slog here, folks. No doubt about it. We've done a lot of technical damage here recently. All right, so 1254. I think on balance, hopefully you felt like you got some good value out of that 2 hours. Geez, that 2 hours sure goes by quick, doesn't it? We answered these questions, so hopefully you feel good there. Interesting. I think that, as I've said before, I think Bitcoin now is becoming part of sort of the broader ecosystem. And I think that things like the junior markets looking a little bit heavy down in the stock market, reload zones, all that kind of talk, double tops, triple tops. Where's that one? It was there. I suppose the good part about this is there really isn't that much of a market structure top there, so we could punch through resistance, head back up here. Probably, as I showed you with this rune, I wouldn't be surprised if there's some sort of head and shoulders, and our summer rally probably brings the junior stock market back up to fill in this very big hole in the charts up top here. And that probably does the same thing. We'll just use the rune. We probably rally right back up into these areas on things like the rune. And, like I said, we did other, actually, I really haven't looked at other altcoins here today. So, anyway, maybe we'll look at more altcoins another day. Okay, over on YouTube, don't really see too many comments. Hope you feel as though you got some value out of watching this broadcast here today. And of course, remember, we do have a new school term coming up here relatively soon. If you just watch this whole bull market and are kind of like, wow, man, sure would love to participate, but I'm not quite sure how I should set myself up to participate. That's what our school program is all about. We're not really, as I said halfway through the broadcast, I'm not really here to tell you what to buy and sell. If anything, what should happen here is we collectively at TRI, we're posting ideas in the lounge and in our little old lady room and our secret options formula room and our harmonics room. And people are just posting ideas. And when you get a whole bunch of people that go, you know what, that's a pretty good looking trade idea. Well, that's the kind of stuff that gets my attention. It's interesting. Somebody got me looking around the junior mining market and I ran my screens and this model was taught to me by an old VSC floor broker. Gotta tell you, man, that's pretty damn compelling looking chart. Try to buy against the bottom end of range, sell against the top. I do believe I might just do a little bit of shopping here in the junior metals markets here in the not too distant future. So if you want to learn the process, that's what this image was all about. There are a whole bunch of steps involved. And hopefully, people like Liz and Jim brought them on through the winter. Hopefully, they feel as though when they look at an image like this, they can kind of understand it now. But this is what we're here to teach you how to do. And we're here to teach you a profession. So this isn't something that you're just going to take a weekend course and all of a sudden, boom, you're going to be Mr. Hey, look, I know everything. If anything, tell everybody, and frankly speaking, if people can drop $5,000 on like a weekend, learn out what's so wonderful about Bitcoin, Gucci sweaters, and all that, I would say that the $5,000 that we ask you to invest in TRI and your education, and the course is like 36 weeks long, and then has like 2 or 3 week breaks at 3 different modules. Man, that's good money invested in yourself. And I've yet to see anybody who actually goes through all 3 school programs, passes all the exams. Number one, they go on to do some incredible things in the marketplace. One guy in particular, he actually goes and he buys land and he actually gives it back to the state as long with the condition that it has to become parkland. I mean, that's how rich you can get if you understand and learn this thing called the process and then just keep doing it year after year after year after year. The money can get absolutely ridiculous. So if you'd like to learn, our new school term starts in a few weeks, and we'd love to have you on board. All right, everybody. Chris, was there anything I was supposed to talk about that I did not? I don't know whether you can help me. All right, so why don't we leave it at that? Getting the green light that I did an okay job here with you guys. It's going to take a while to sort of corral things back in and see if we can get these weekend shows a little bit more focused. But hey, this is a good first attempt to try and work a newer format for these shows. So. All right, everybody. Have yourselves a great day. Wish Liam and I luck on the road. It is now 1 o'clock. So off to my real job now. And your karmic best wishes for Liam and I are greatly appreciated. They help me a lot. So, all right. All the best. Hugs and kisses. Bye for now.